Hey, what's up, my friends? So in today's episode, I want to share with you when should you not trade with the trend. Now you might be thinking, but
Rayner, you always tell us to trade with the trend, man. What's going on?
so yes, I get it. I am a strong advocate of, trend trading with the trend, but there are scenarios, there are times, right, where it's not favorable to be trading with the trend and it's much better to just, remain on the sidelines. So here are three scenarios, right, where I advocate, right, not trading with the trend and just, remaining on the sidelines. Or if you're an advanced trader, you can even take the opposite end or take a counter trend trade. Number one, when the price is overextended from a respected moving average. So for example, let's say the market is in an uptrend, series of higher highs, higher lows. And you notice that this trend, right, tends to respect the 50-period moving average. It has, retested it 3 times. So you can see, toing, 3 times it respects this 50-period moving average. So at this point in time, right, the price is very far away from the moving average. It's just, had a strong run up higher and it's quite a distance away from the 50-period moving average. So you can imagine that if the price is very overextended from the moving average, there's this like empty space right on your chart. So when you notice this huge empty space, this is a sign, this is a signal to you that you don't want to be trading with the trend. Why? Because this is when this market is prone to making a pullback, possibly back towards the respected moving average, like the 50-period moving average. And if you were to be trading with the trend, if you were to buy, you will likely get stopped out on the pullback. Make sense? So this is why if you notice the market, an uptrend respecting a certain moving average and is overextended away from it, don't trade with the trend. Right? If possible, just stay on the sidelines. Number two, you don't want to be trading with the trend when the price is far away or when the market is far away from a price structure. So for example, let's say market is in a range, it made a huge bullish breakout. Right now, market is in an uptrend, time to buy. Not quite, because if you analyze the chart, right, it's a huge bullish breakout out of resistance. If you were to buy right now, where do you set your stop loss? You would probably have to set your stop loss. I'm guessing, a logical price structure would be below the previous resistance, which could now act as support. But the problem is the price has moved too fast, too soon. And if you're to be, chasing the breakout, trading with the trend, the market, right, is the stop loss is very far away. Okay, and again, right, what people do is, I'll set a, fixed stop loss, $10 stop loss, $20 stop loss, right, depending how much I'm willing to lose. What happens? If the breakout fails, it becomes a false breakout, you will get stopped out. Market makes a normal pullback, you get stopped out because your stop loss, right, is at a poor level to start with. So again, if you notice the market has, broke out aggressively and you think, oh, it's an uptrend, it's time to buy, just hold your horses first, right, because you don't want, right, to get stopped out on the pullback or reversal. Alright, so that's number two, when the price is far away, or rather when the market is far away from a price structure. In the case of, price breaking out of resistance, move up too fast, the resistance area is very far from your entry price right now, just let the trade go, don't chase the breakout. Number three, in an uptrend, right, sometimes you might be able to draw trend channels, right? Trend channels are just simply trend lines. You just draw parallel trend lines, one for the upper end of the trend and one for the lower end of the trend. So it kind of looks something like this, right? A trend channel, okay? So if the market is in an uptrend, it respects this trend channel sometimes. So clearly, if the market is in an uptrend and it's within the trend channel boundaries, clearly if it's at near the upper boundaries for an uptrend channel, you don't want to be buying at the upper boundary. Why? Because if it's contained within the channel, there's a good chance it could come back down towards the lower part of the channel. And when that happens, you will again get stopped out. So in essence, right, what I'm trying to share over here is that, yes, market is trending, it could trend, but it doesn't mean that you want to blindly buy, because if it's far away from an area of value, if it's far away from price structure, if it's far away from a logical level for you to set your stop loss, then you don't want to be chasing the trend because there's no logical place to set your stop loss. That's one. Number two, when the pullback comes, you will likely get stopped out because you randomly put a stop loss on your trade. Make sense? So where I'm getting at is that, don't trade far away from an area of value even though the market is trending. So this leads to the point where if you want to trade with the trend, trade it from an area of value. It's like, duh. So an area of value could be things like the 50-period moving average. If that's a healthy trade and the market respects the 50-period moving average, look to enter your trades near that area of value, near the 50 MA. Or if market is trending higher, it comes back and retest support, look to buy that near that area of value, near that area of support. Or if it's respecting a certain trend line, bounce off 3 or 4 times, when it comes back for a 5th time, for example, and there is a bullish price rejection, look to trade from that area of value. Don't chase the markets. Don't buy when the trend is overextended, because again, when the pullback comes, you will likely get stopped out. So let's do a quick recap. Number one, don't trade with the trend, right, when it's far away from a respected moving average. Number two, don't trade with the trend, right, when the market is far away from a price structure. Number three, don't trade with the trend, right, when you realize that within the trend is near the upper trend channel, right? For example, in an uptrend, okay? And the fourth thing to share is that trade from an area of value, not, when the price is far away from it. So with that said, I wish you good luck and good trading. I will talk to you soon.